Welcome back, everybody. As you already know, we go through some TA in the beginning. We start going through some different news events that happened this week, and we also look into future events that are going to be happening in the future, outlook for the next weeks to come. So we're going to go start with TA. TA not looking good. QQ's created a lower shoulder. So for me, the inverse head and shoulders is invalidated. Normally, what I would like to look at is what is the angle in which the shoulders make. And from there, try to be able to replicate that on the other side. This would have been the bounce point for me, but we broke down from that area. So for me, it's basically invalidated. Technically, what you could do is you could wait to see if it creates a new lower low. And if it does, then it's invalidated. But I'm not going to roll with that just because these shoulders were pretty leveled. Sometimes there are cases whenever it might come like right here, drop down, and from there come all the way up here, and then come down somewhere over here. In that case, yeah, maybe. But this is actually a pretty like even setup, I guess you'd say. So for the peaks of the shoulders, I like to see it pretty even as well. No, it's all based off of preference. There's no right way in order to trade these patterns. It's basically what your interpretation of the information is, and also the ticker you're trading, because sometimes tickers trade different than others. As for levels, I kept my levels the same. There's two gaps to fill for the upside. I think it's 90 something percent of gaps get filled um, eventually, and then like 70 something percent get filled within a couple of trading days. Obviously, these haven't got filled yet, so it might be a minute before we see those filled if we continue to the downside. So we're going to look at some indicators. RSI not looking too hot, guys. As we spoke about in last video, what we wanted to see is we want to see this upwards trend line hold. What happened? We broke down through it. Specifically, I believe it was yesterday. Yesterday, looks like we closed through it. Definitely not good, guys. Definitely not good. Attitude, strength towards the market. We lost momentum going to the upside, or this built up spring momentum that was going to be for the upside once we kind of started breaking down. Not only that, but if we look at the anchor VWAP, again, I'm pinging this to the highest point of the year. And currently we're about 1.5 deviations down. Um, it's technically slightly bullish, but for me, I like to wait till it gets to lower risk ranges just because you can see it bounce pretty heavily off of the second and above. Technically here it did bounce as well, but I'd like to wait for that extra confirmation. Oh, actually, that's 2.5. This is at the two. Sorry, excuse me. But yeah, I like to wait for those deeper deviations just because it's going to be much further and stronger move to the upside when that does happen. Same thing here, 1.5. Or almost the two if you ping it from the lows of the 14th. So again, not too much there to work with. EMAs all curling to the downside, short term and long term, which is definitely not good. Um, as well as volume profile. There's not that much data in this area, so I'm not even going to bring that one up. What else? Evan Cabral strategy. Yes, we're gonna look at the B bands. As you could see that they were leveling out right here, and even contracting on the bottom side. But now they're curling up, curling out, which means that the move is happening, and this is the move right now. We could come down and ping the second deviation or the third deviation. It's very much a possibility. At that point, we would go below the 316 level because these continue to expand and continue to move as the price continues to come down and get closer to the deviation lines. So we probably could see it ping down here if it was to come all the way down to the bottom of the range. Um, and I think this is all the indicators that I'm going to look at for QQQ. Let's go and look at the SPY. SPY is holding up a little bit better than QQQ. Bigger red days, don't get me wrong. But as for like overall setup, the inverse head and shoulders is still intact, in my opinion. So we could a relief bounce here at this 320, what is it, 326-ish level around there. But yeah, so that's inverse head and shoulder pattern. Again, increasing seller volume on bigger candles. Same thing was with the QQ. I don't know if I pointed that out or not. We got an increase in selling volume, definitely not good. SPY, look at the same indicators. RSI broke down from its little upwards trend it had the past 2 days. Look at the anchor VWAP. Again, we're heading towards the 1.5 deviation on a longer time frame, which is from the ping high, ping lows. Actually, I'm going to have to adjust this one because technically we did not create a lower low in March. So this is the 224. We're only at the first deviation when it comes to the SPY. So SPY holds up relatively stronger than the QQ because QQ is more volatile because it's technology, volatile to the upside and volatile to the downside. So it's one of the more volatile sectors. Alrighty. So we've seen those, both of those, not really giving us too much, slight bullishness, but definitely not anything to make a trade off of. We look at the EMAs, Evan Cabral strategy, and let's go ahead and get out what else? I guess the only two things, the last things I want to look at. I'm gonna go ahead and hide the EMAs real quick. Look at Evan Cabral strategy, kind of in the middle, heading towards the bottom. Once again, we're having this contraction phase whenever we're kind of chopping. Now we're starting to curl out, indicating the move is initiated. We could come down below the 416 level in order to tag the second deviation or the third deviation line. If the move was to continue, um, it's anyone's guess at that point. And then the EMAs, they're all stacked on top of each other, but currently moving towards the downside as we were at in a consolidation phase, currently moving into a downward move. So definitely not looking good on the SPY. The seller volume, RSI breakdown, at, EMA is curling to the downside. It's definitely not something good. Or the Bollinger Band's expanding. It's not a good thing. Not a good thing at all. I also want to take a quick look at a lot of the different big name tickers there are out there. So let's look at Meta, Facebook. Facebook created a new lower low. Um, we go all the way up to the top where I have my other tickers. Apple, there was this trend line that I was trying to follow. We broke through it with a daily close. Technically, we did gap down below it on this day, but the thing is that was the open. I'm more concerned about where the close is for the day. Look at stuff like AMD. AMD broke its 100 support line, which was pretty strong support. We broke that, even broke the 90s support, and currently we're heading to the downside. We're in the 80s now, which is pretty crazy. Even Berkshire. Berkshire is the what's his name? Warren Buffett, the man himself, was not able to withstand this move that we had in the market. And we had a break from this pennant. It would have been a nice bullish move to be able to get this contraction into an expansion phase to the upside, but we got the expansion to the downside actually. Look at stuff like Nvidia. Nvidia created a new lower low for the year. So these are the lowest points for the year was a 208-ish level, 206. Now we're in the 190s. It's crazy, man. Google even created a new lower low as well. I was trying to see if this long-term trend line would hold up. Support. I mean, resistance, support, supports. Yeah, you could argue that support, maybe not. Support here, and then eventually we actually broke through it. And it's crazy how these big names are having these wild ass moves. Tesla's probably one of the strongest ones to hold up, I guess you'd say. We had this flag and then having a breakout because of earnings, good earnings, but currently we're just kind of like consolidating. So it'll be interesting to see what happens because technically this did put in a lower low each time, lower lows, and could this be a possible lower low? Who knows? Oh, my goodness, it's looking scary in the markets, but usually whenever there's fear, that's the best time to buy, But with possibility of a recession to come soon, might not even be the best buying opportunity. So I'm still gonna do my weekly DCAs. Unfortunately, I wasn't able to before the market closed, but I plan on to on Monday. The next thing is what I want to talk about is the news. So, Fed Powell talked yesterday about a half point hike basically being in the books for May's meeting. Um, that was kind of expected for the markets, but what the markets wasn't expecting is that this right here. They're basically pricing in 200 basis points for the next four meetings for September. So that's basically a 50 basis point rate hike for each meeting, which is definitely not what the market has predicted. The market was predicting two, the next two to be 50 basis points. So now that they're pricing in four, that's definitely going to lead us to this type of move. That's scary, man. That's scary. Um, I guess some good news that we have is the DXY is coming up on resistance, whether it be this possible trend line that will be the top, which technically we are above it, or it could be this 102, 103 level. Could be a triple top that we could put in, and we could actually see stocks and assets rise in value as the buying power of the dollar goes down. Not only that, but the bonds, the yields are actually having a crazy rally still. And if you look at them by themselves, let me go ahead and pull this up. US 10 yield. Come on, load, bro. US 10 yield. Look at this. What percentage is it at? It's coming up upon on the 3% mark, and that's resistance for this ticker for the 10-year yield. As we come into this area, I guess you say call it what is it called? Supply zone. There's a lot of supply in that area, so we'll probably get a little downward movement. And if that happens, bonds are going to start looking more attractive. Currently they're down nastily, bad. But if they continue to go up, then that could be bad news for the stocks. But currently they're doing the same thing. They're both falling, which normally doesn't happen. Usually bonds do good whenever stocks are doing bad, and stocks do good whenever bonds are doing bad. So interesting stuff. Also, earnings this past week, three major companies I like to talk about is Netflix, Snap, and Tesla. Netflix earnings. They had their first loss of subscribers in 10 years, more than 10 years. That's not good. That's kind of the same thing that happened to Facebook. Facebook had a loss in users, or a slowdown in users, new users, that is. And from there, the stock plummeted. As you can see, Facebook had, well, not only that, but they changed their company outlook. So I guess you can't say committed all to that. But you see this big ass gap from they were trading at 320 to the next day trading at, or close is at 330. That's crazy. Netflix, same thing. Oops, sorry, wrong stuff. I always put the wrong ticker in for Netflix. The same thing happened. These past two, they had decline in revenue, bad projections. Now they actually had the loss in users. We fell from the close of the day was 350 all the way down to a close of the next day of 325. And look where we're at now. That is crazy stuff, guys. Crazy, crazy stuff. Crazy movement. Earnings having these stocks trade like meme stocks, basically. Um, yeah. Also, they're planning on cracking down on people's accounts, making sure they're not sharing too many passwords with too many people. Not only that, but they're also either have or they're going to raise their subscription price. So watch out for that, guys. Another thing was Tesla's earnings. Tesla beat her revenue, they beat the earnings, their shares were up. They had sold a record number of what's called vehicles in the quarter. However, the outlook for the year was relatively bearish. I don't know if you would call it bearish, but they're expecting a slowdown. They're holding up relatively nicely compared to the rest of the market due to their earnings. But as always, we close down here and then we gap up here. On good earnings, usually we get a sell off. And that even happened on Google's last earnings. We'll look at them real quick. They had these record numbers. We had this incredible gap up, but what ended up happening, we ended up having a sell off for the day. So it's just typical for that to happen. Um, we're gonna see what happens in the future. Snapchat earnings. Snapchat actually missed on revenue. They missed on earnings, but they're up on active users 20% of the year, which is really good for them and really good for their ad revenue and their plans that are starting to happen. They also have created this partnership with, I don't know how to pronounce this, is Tenuity? Tenuity? I guess that's how you pronounce it. But they ended up partnering with Snapchat, which is going to help them with their revenue. So they're expecting increase in revenue for the year, the next quarter to come. Not only that, but an increase in users as well. So it's looking good for their future outlook. Where are they at? Yeah, where are they at? They're triple bottling, possible triple bottom putting in right here. Inverse hammer, which is a bullish sign at support, on increasing volume. So it's definitely be a good thing to watch. Will Snap have its rally? Have its will it carry the XLC sector? Because we've been dying ever since when was that? September of last year, way before we actually had our pullback from the Fed news and stuff like that. So it'll be interesting to see what ends up happening. Alrighty, Russia and China testing their missile systems. That's scary stuff, guys. Scary stuff. Tensions in Russia and Ukraine are still pretty bad. I honestly haven't been paying too much of the news, but I don't see as much coverage in it in Bloomberg's tweets anymore. So I mean, I do see that in his tweets. So I imagine it's still pretty bad over there. Biden's sending aid, and hopefully it's more aid next week as well in his agenda. Hopefully this could get settled soon because it's a lot of loss of life and a lot of conflict, man, and it's not helping anybody. It's not helping the economy. It's not helping the Ukrainians. It's not helping our food supplies. It's not helping the markets. It's bad for everybody, except for Putin, I guess. Because if not, then he'd probably stop. Mortgage rates reaching a 12-year high, 5.11%. That's crazy. Um, at the end of the day, that's not as bad as it could be. There's times whenever the interest rate was even way higher than that, but compared to what we've been used to, we were at zero during the lows of the pandemic. And now we're at 5.11. Yeah, it's pretty scary stuff, guys. mandates on travel. Whether it be Uber, Lyft, airlines. The mandates have been lifted. However, in some areas they still are required. Like if you were to go to California and stuff like that, I imagine. But they've been lifted. Should be bullish on travel. And if we actually look at some of the charts, American Airlines had their earnings, I believe it was yesterday or the day before, and they broke out of this channel they've been trading within. You could even redraw this to where it's the high right here, possibly something like that. The build up for the earnings, and then they had a gap up to the earnings. So it's looking bullish for the airlines. They haven't been bullish in a while. They still got to solve their jet fuel problems because that's definitely a problem with Ukraine, Russia. But as you can see, this ETF for airlines is also doing good as well. We had a breakout, possible retest at the moment. Could we see continued upside if we were to get a bounce and like the SPY and stuff like that? Definitely, definitely. The last thing, or one of the last things I want to talk about, is Disney versus the legislation in Florida. Disney spoke out against their what is it? Don't say gay law. Basically, what the government wanted to push in Florida was that they don't want to teach inappropriate stuff, quote unquote, to kindergartners or third graders, which is about gays and gender identity and stuff like that. And basically, Disney spoke out against that. What they ended up doing is they ended up what's called stopping political donations, and they, what else did they do? Somewhere in here, stop political donations. They spoke up against and out against them, and something else basically. But as one of the people put it in another video, they kicked the hornet's nest because the very legislation that was in place in order to protect them from laws, they bit the hand that fed them. Basically, they have their own jurisdiction. They have their own police force, their own EMTs, their own fire uh, fighting stations and stuff like that that they run themselves. Now that's going to be taken away from them. Passed through the government system in Florida. I don't know what the thing is called. I don't want to call it Senate because that's on the national level. But whatever it is, they passed it. They passed it on to the governor. The governor signed off. So now Disney's basically losing their special jurisdiction abilities and laws, which should have happened a long time ago, just because it's unfair to the competitors from a free market standpoint. But now the Republicans have a reason to actually boot them out because of that. The conflict of interest when it comes to teachings. What to look forward to? We got a whole bunch of earnings coming up, guys. We got a lot of the FANG stocks reporting next week. Microsoft, Google, Meta, Apple, Amazon. It's going to be a very volatile week next week, especially for the big hitter players. Hopefully, they could be able to save our markets because QQ hurting, man. QQ hurting, and I definitely don't want to see these new lower lows. I like I spoke about in previous videos. I think we do take another stab at all-time highs before ultimately coming down and going into a recession. Hopefully, that can happen sooner than later. But I have a trading plan in place in order to be prepared for any situation. So if we were to continue to the downside, as we go lower, dynamic DCA basically. As we continue to go lower, I go heavier in my averaging. As we go higher, I lessen up on my averaging, and I'll actually start probably averaging out once we get past these 390 levels, 400 levels. So we'll see, we'll see. I'll talk more about that in another video, but that's it for this week, guys. Uh, until next time, see y'all guys later.